Netflix stock is down big after hours after they reported their Q4 results. And check this out, they are almost down by $100 per share. They closed at $508, down already from a high of $700 per share, now due to disappointing growth in Q4. But they already kind of stated this before, and I think that this makes Netflix stock even more appealing. So yeah, stay tuned to my analysis. Welcome back to the channel. My name is Adam. On this video, I talk about stocks, cryptocurrencies, as well as my portfolio and deals in the market. And let's just take a look at earnings per share. They beat on both the top and bottom line. So earnings per share came in at $1.33 relative to 82 cents expected. Revenue came in at 7.71 billion versus 7.71 expected, according to Refinitiv. However, global paid net subscriber additions was 8.28 million versus 8.19 million expected. So, I mean, I feel like this was pretty good, but let's just take a look at the overall summary here. The streaming beat on both the top and bottom lines, but shares plunged in after hours trading on slowing subscribers growth. The company said for the first quarter of 2022, it expects to add 2.5 million subscribers compared to the 3.98 million it added last year. So, you know, when you go from 3.9 million growth to 2.5 million growth, especially with a fast growing stock like Netflix, it's a high growth stock, you are bound to see quite a dip, especially in the environment that we're in. Each high growth stock, it seems like, is just getting absolutely hammered, right? And I mean, we've seen like down 19% after hours. And it's already down like 15% year to date. So let's just take a look and about Netflix a bit more in depth. So the company added 8.28 million global paid net subscribers in the fourth quarter. Analysts had expected the company to add 8.19 million according to street account estimates, but that's fewer than the 8.5 million subscribers Netflix added in Q4 2020. The same figure it had forecasted for Q4 2021, and its outlook was worse. So I just find this really fascinating how somehow during the fourth quarter, that's when most subscriber growth tends to happen. I think that's partly because most of the content slate is scheduled for later on in the year. So this is historically how many subscribers they've added. And so 2017 Q1 they've added 5.3 million, and Q4 they added 6.5 million. So a huge boost there. Same thing for happened kind of in 2018, except Q1 was pretty strong, but Q4 was even stronger, from 8.3 to 8.8 million. 2019, of course, we all know what happened leading into 2021. But in the first quarter of 2021, they added 15.8 million subscribers just in Q1 alone, and that obviously has a lot to do with the pandemic. And as we see in Q1 of 2021, they only added 4 million, 1.5 million in Q2, 4.4 million in Q3, and 8.3 million in Q4. And apparently this just was not enough, because they also their expectations for Q1 of 2022 were worse than expected. Netflix said it plans for a more back-end weighted content slate in the first quarter, with big premieres set for March. But that's similar to the image Netflix had painted heading into Q4. Netflix and analysts had anticipated a large jump in consumers at the end of 2021, when the company released new TV shows and movies that had been pushed to the back half of the year. During the quarter, for example, Netflix released high-performing content such as Emily in Paris, Don't Look Up, Red Notice, and You. And so Netflix had said increasing competition from other companies was one reason for the slowdown, although in the past it had said companies like Apple and Disney wouldn't materially affect growth. And part of the reason, or part of what Netflix is trying to do to offset some of this slower subscriber growth, is by increasing the Netflix subscription, right? So Netflix announced price increases in the US and Canada last week. In the States, the monthly cost for the basic plan rose $1 to $9.99, and the standard plan jumped from $13.99 to $15.49, and the premium plan rose from $17.99 to $19.99. So Netflix strategy is to increase prices as customers become even more entrenched in the company's exclusive content. Price increases can help offset waning customer growth. So, I mean, I think that this is a good move. Investors applauded when Netflix initially laid out plans to increase the price of their subscriptions. And I mean, if you're looking year to date, Netflix is down by 15%. And because it's part of the NASDAQ, I mean, all stocks in the high growth tech company NASDAQ are getting hammered. And so I wouldn't be surprised. I mean, you add another 20% to this move, and you're looking at, I mean, this company is trading at around $400, where it was kind of at the early stages of the pandemic, right? So, I mean, I think that this company could potentially be a steal, especially since it's already down 26% from its lows. However, I would apply the 3-day waiting rule where you don't jump into the stock just yet. You wait a couple of days or weeks before the selling pressure eases and then start slowly getting into the stock. So let me know what you think. I'd appreciate a thumbs up. Subscribe to the channel if you haven't already. Yeah, feel free to check out the links down below in the Discord to join a growing community. But yeah, love you all. Peace. Let me know what you think. Cheers.